Preparing for FP&A Analyst at Aegon interview? You've reached Candy Mentor, and this video is for you. We'll walk through 20 key questions you're likely to face. For each question you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. What does FP&A contribute to an insurance company such as Aegon? FP&A turns financial data into decisions. At an insurer such as Aegon, I would connect premium or fee income, claims, expenses, investment results, capital usage, and customer trends to budgets and forecasts. I would explain variances clearly, challenge assumptions constructively, and provide management with actions rather than simply reporting numbers. Strong FP&A also creates discipline around targets, scenario planning, and accountability, helping leaders balance growth, profitability, resilience, and long-term customer value. While answering, focus on planning, forecasting, performance analysis, management reporting, business partnering, and how FP&A connects financial outcomes with insurance drivers, customer behavior, capital requirements, and strategic decisions. Question 2. How would you build an annual budget for an Aegon business unit? I would begin by understanding strategic targets and the prior year baseline, then translate them into operational drivers. For an insurance unit, that could include customer numbers, premium volumes, persistency, claims, commissions, headcount, and investment income. I would agree assumptions with business owners, build monthly phasing, challenge unusual movements, reconcile the plan to accounting data, and run review sessions. Finally, I would document approvals, lock the version, and establish variance monitoring routines. Make sure to cover the timetable, top-down targets, bottom-up drivers, assumptions, ownership, consolidation, challenge sessions, review cycles, and controls over versioning, approvals, and reconciliation to the general ledger. Question 3. How do you approach forecasting revenue for an insurance or pensions business? I would forecast revenue from its underlying economic drivers rather than applying a simple growth rate. Depending on the product, I would model new premiums, renewals, policy persistency, assets under management, fee rates, and investment performance. I would review actual trends against assumptions, incorporate known market or regulatory changes, and create upside and downside cases. That approach makes the forecast explainable and allows management to see which actions can influence the outcome. In your answer, talk about product economics, new business, renewals, persistency, assets under management, fee rates, premiums, market movements, seasonality, and distinguishing controllable assumptions from external variables. Question 4. Tell me about a time you explained a significant budget variance. In one reporting cycle, expenses were materially above budget. I first reconciled the management report to the ledger, then split the variance by department, vendor, and timing. The main drivers were an accelerated technology invoice and vacancies remaining open longer than planned, partly offset by lower travel costs. I explained the distinction between timing and run rate impacts, updated the forecast, and agreed an accrual and hiring review process with the budget owners. Be sure to mention the size and nature of the variance, your investigation method, data validation, root cause, stakeholder communication, corrective action, and how you prevented the issue from recurring. Question 5. Which KPIs would you monitor in Aegon's FP&A function? I would tailor KPIs to the business model, but likely monitor revenue or fee income, operating expenses, operating result, cost-income efficiency, new business, persistency, customer net flows, assets under management, claims performance, and capital metrics. I would separate leading indicators, such as sales pipelines and retention, from lagging financial outcomes. The key is linking each KPI to an owner, target, trend, and management action rather than producing an overcrowded dashboard. Focus on financial and operational measures, including revenue, expenses, operating result, cost-income efficiency, customer flows, persistency, claims, assets, capital, and measures aligned with the specific business unit. Question 6. How would you explain the difference between a budget, forecast, and actual result? A budget is the approved financial plan, usually set before the year begins, and provides the baseline for accountability. A forecast is the best current estimate of where results will finish, incorporating actual performance and updated assumptions. Actuals are the results recorded in the accounting system. Comparing actuals with budget measures performance against plan, while comparing actuals with forecast tests whether our latest expectations remain reliable and whether corrective action is needed. While answering, distinguish the approved baseline, the latest expectation, and realized performance. Explain their different purposes, timing, assumptions, and use in accountability and decision-making. Question 7. How would you forecast operating expenses and headcount? I would build headcount from opening employees, approved hires, expected start dates, attrition, vacancies, salary increases, bonuses, and benefits. For non-personnel costs, I would review contracts, purchase orders, committed spend, inflation, technology plans, depreciation, and known one-offs. Monthly phasing matters because start dates and invoices rarely align evenly. I would reconcile the forecast to the hour and finance systems, then review assumptions with cost center owners before finalizing. Make sure to cover employee movements, salary inflation, vacancies, contractors, vendor contracts, depreciation, timing, one-offs, committed spend, and reconciliation to approved organizational and cost center structures. Question 8. What is your approach to monthly management reporting? I would start with a clear close timetable and confirm that source data reconciles to the ledger and reporting hierarchy. Then I would compare actuals with budget, prior year, and latest forecast, investigate material movements, and separate timing, volume, rate, mix, and one-off effects. I would write concise commentary focused on causes and actions, validate it with stakeholders, and present a dashboard that highlights decisions management needs to make. In your answer, talk about close deadlines, data quality, reconciliations, variance analysis, commentary, visual presentation, stakeholder review, and ensuring reports lead to decisions rather than merely describing historical performance. Question 9. How would you investigate an unexpected decline in operating profit? I would build a profit bridge from the prior period or forecast, separating revenue, claims or benefits, expenses, investment results, and other items. I would validate the data first, then analyze volume, pricing, mix, persistency, market movements, timing, and one-off effects. For an insurer, I would also consider claims experience and investment assumptions. After identifying the root causes, I would quantify their expected duration and recommend specific operational or forecasting actions. Be sure to mention a structured bridge from revenue to costs, driver-level decomposition, data validation, market and operational factors, materiality, scenario analysis, and recommended management actions. Question 10. What would you include in a scenario analysis for Aegon's business? I would define a base case and then test variables most relevant to the business, such as interest rates, equity markets, credit spreads, inflation, claims, persistency, sales volumes, expenses, and capital. I would show both isolated sensitivities and integrated scenarios because assumptions interact. Each case would include financial results, liquidity or capital implications, key assumptions, and management responses. The purpose is not to predict perfectly, but to improve preparedness and decision quality. Focus on relevant sensitivities such as interest rates, equity markets, credit spreads, inflation, claims, persistency, sales, expenses, and capital, while explaining assumptions, interactions, probabilities, and management responses. Question 11. How can International Financial Reporting Standards 17 affect FP&A reporting and forecasting? International Financial Reporting Standards 17 changes how insurance performance is measured and presented, so FP&A must understand the links between actuarial assumptions, insurance revenue, service expenses, finance results, and the contractual service margin. I would work closely with actuarial, accounting, and reporting teams to understand movements and avoid treating technical outputs as unexplained variances. Forecasts should align with the accounting framework, while management reporting should translate complex drivers into clear commercial and operational insights. In your answer, cover the relationship between actuarial and finance data, insurance revenue, service expenses, contractual service margin, assumption changes, comparability, reporting controls, and translating technical outputs for management. Question 12. How would you work with actuarial, accounting, and risk teams? I would establish clear ownership, definitions, deadlines, and handoffs at the start of each planning or reporting cycle. Actuarial teams may provide claims or liability assumptions, accounting confirms recognition and ledger treatment, and risk adds capital or stress perspectives. I would challenge differences respectfully, reconcile outputs to reported numbers, document judgments, and escalate unresolved issues early. My role would be to integrate specialist inputs into a coherent financial story for management. Make sure to cover shared definitions, data ownership, timetable alignment, challenge, documentation, reconciliations, escalation, and translating specialist analysis into consistent financial planning assumptions. Question 13. Describe how you would improve a manual Excel-based reporting process. I would first map the process, including data sources, manual interventions, review points, and recurring errors. Then I would standardize templates, remove duplicate inputs, and automate repeatable tasks using suitable tools such as Power Query, SQL, or controlled system reports. I would preserve review controls through reconciliations, exception checks, version control, and documented ownership. Before implementation, I would test results against prior reports and measure improvements in speed, accuracy, and transparency. While answering, focus on mapping the current process, identifying risks, standardizing inputs, automating repeatable steps, maintaining controls, testing outputs, documenting ownership, and measuring time and quality improvements. Question 14. How do you ensure accuracy when working with large financial datasets? I use layered checks rather than relying on one review. I confirm the source, reporting period, population, and definitions, then test completeness, duplicates, outliers, sign conventions, and totals against the general ledger or an independent source. I keep transformations controlled and reproducible, document assumptions, and investigate exceptions rather than hiding them. A second-person review is valuable for material outputs, especially where data feeds executive decisions or regulatory reporting. Be sure to mention source validation, completeness checks, reconciliations, duplicate and outlier testing, consistent definitions, controlled transformations, review evidence, and maintaining an audit trail for significant calculations. Question 15. Tell me about a time you challenged a stakeholder's forecast assumption. A stakeholder assumed a cost would remain flat despite a supplier contract containing an inflation increase. I shared the contract evidence, modeled the timing and financial effect, and prepared a base case plus a mitigation scenario. Rather than rejecting the original view, I asked what actions could offset the increase and agreed a revised forecast with an efficiency target. The discussion improved accuracy and preserved the relationship because the challenge was evidence-based and solution-oriented. In your answer, describe the assumption, evidence used, respectful challenge, alternative scenario, agreed resolution, and outcome, emphasizing partnership rather than confrontation or simply rejecting the business view. Question 16. How would you prioritize competing requests during a reporting deadline? I would rank requests by regulatory or control importance, materiality, decision impact, deadline, and dependencies. I would complete core close and management reporting requirements first, then address analyses that influence imminent decisions. I would clarify scope, provide realistic delivery times, and communicate trade-offs early. Where possible, I would use a standard template or delegate data gathering, while protecting review quality and documenting any assumptions or limitations in a fast turnaround. Focus on materiality, deadline, decision impact, regulatory or control requirements, dependencies, stakeholder communication, delegation, and maintaining quality while avoiding unnecessary analysis that does not affect decisions. Question 17. What financial controls are important in an FP&A process? Important controls include restricted access, clear ownership, approved assumptions, version control, reconciliations to the ledger, review evidence, and segregation between preparation and approval where practical. I would also maintain change logs for forecast updates, investigate unexplained movements, and use materiality thresholds to focus review effort. Good controls should be embedded in the workflow, not added after the report is produced, and should make outputs reproducible and auditable. Make sure to cover access controls, reconciliations, data lineage, approvals, version control, segregation of duties, review evidence, forecast change logs, materiality thresholds, and timely remediation of identified issues. Question 18. How would you assess whether a cost-saving initiative is delivering value? I would establish an agreed baseline before implementation and define the benefit precisely, such as lower vendor spend, reduced headcount cost, or avoided inflation. Then I would track actual savings, implementation costs, timing, and any volume or mix changes that could distort the comparison. I would also test service quality, customer outcomes, and risk impacts. Finally, I would report realized net benefits against the business case and identify corrective action for shortfalls. In your answer, distinguish gross savings from net benefits, establish a baseline, track timing and implementation costs, consider service or risk effects, assign ownership, and compare realized benefits with the approved business case. Question 19. Why do you want to work in FP&A at Aegon? I am attracted to Aegon because insurance and long-term savings combine financial analysis with a meaningful customer purpose. FP&A would let me work across performance, forecasting, investment in capabilities, and risk-aware decision-making rather than focusing on one transaction. I also value the opportunity to partner with operational and specialist teams, turn complex information into practical recommendations, and help management allocate resources in a disciplined way that supports sustainable growth. Be sure to connect your motivation to insurance and long-term savings, analytical business partnering, Aegon's customer purpose, scale or transformation, and the opportunity to support disciplined, sustainable decisions. Question 20. What would you do in your first 90 days as an Aegon FP&A analyst? In the first month, I would learn Aegon's products, organizational structure, reporting calendar, systems, definitions, and key stakeholders. In the second, I would reproduce core reports, understand forecast drivers, review controls, and identify recurring data or process issues. By the third, I would deliver reliable analysis independently, strengthen stakeholder relationships, and propose one practical improvement supported by evidence. I would prioritize credibility and business understanding before making broad process changes. While answering, cover learning the business model, reporting calendar, systems, stakeholders, KPIs, control environment, current pain points, quick wins, and building credibility before proposing larger process changes. If you are still with us, congratulations, you are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.